Good morning, it's Tuesday the 25th of April and this is the morning update from Phoenix Blue presented by Tom Colley. When we spoke yesterday we were commenting on gaps in a number of markets following the first round of the French presidential election on Sunday. Following those opening gaps, what we saw was a very quiet day. We saw very little opportunity in the market. Certainly here at Phoenix Blue, we were sitting out of the market predominantly, even on an intraday basis, waiting to see how the news from France played out in the markets in general. In all honesty, we didn't see a lot other than consolidation through the day. So today could be a very similar scenario, waiting to see patiently how the market is going to fully absorb that election result. One of the reasons it's so quiet is the amount of news we've got in the early part of the week. Yesterday, the only news item we had was on the euro and was the German business climate that came in above forecast, but didn't have any effect because obviously the market was the euro was dominated by something much more significant following that election. Going forward today, the only major news we have is consumer confidence for the US out at 3 p.m. UK time, and then overnight, which won't so much affect the daytime trading session, we've got Aussie CPI and trimmed mean CPI coming in around 2:30 a.m. Tomorrow UK time, and that's it. So there isn't a lot to drive the markets in the identified news. However, there are other things that can influence the markets. A couple of big factors coming up. We're coming right up to the end of this week of President Trump's first 100 days. Traditionally, since the 1930s, new US presidents have been judged on their first 100 days as being an indication of how they are perceived to how successful they've been in achieving their goals, and how that will reflect going forward. Interestingly, also at the end of the week, there's another quite critical event in the US. That's the deadline for Congress to approve funding to US government agencies. Now, you may remember back in the Obama administration a few years ago, the Congress weren't able to agree budgets for US government agencies. The agencies were shut, the staff were laid off, and basically all government work was, except absolute essentials, was basically put on hold for, I think it was a week or so at that time. So obviously that's a big risk event. One thing that will also reflect on Trump's first 100 days is that funding will also be relevant to such things as his Mexican wall, which, although he has stated the Mexicans will pay for themselves, he's also stated that the US will potentially need to pay for it first, and then get the money back from the Mexicans by some means which he hasn't explained. But in order for that to go ahead, obviously the agencies involved in building that wall need to have the funds and the budget to do it. So if certain agreements aren't met or reached, then some of Trump's policies could be at risk, certainly in the short term. So we could see disappointment in his first 100 days. We could see markets starting or having left faith in his ability to cut taxes, to improve infrastructure and invest in that way, and do all the things which gave us a bullish dollar following his election, and also bullish stock markets. Over to the charts themselves, here's the dollar index. We've spoken a number of times recently about key levels on this version of the dollar index, and it does depend what time your broker switches from one day to another. We had a close below the key level of $99. I know other brokers where basically it wasn't a clear close below $99. I think I've mentioned before this 98.60 low, which is the low of the year. We can see previously we tested that level, rejected it, and came back to around the $99 level in that area. I see that we're still in that. We've clearly broken this long-term upward trend line, which is significant. So the next hit move here will be truly significant, because if we do get a close below 98.60, we're into new lows for the year and potentially heading back down to this sort of area, this being the spike of Trump's election night, when the market in the first instance were not expecting a Trump win, so the market sold off quite strongly, only to reverse as the effects of a Trump win were perceived more positively. So really critical through here. We are very much in a sort of decision-making moment in that respect. That also means that with so little news in the markets to drive it, we may just have to be patient in that respect. Yesterday on the yen, we saw that opening gap. We saw price sell off from the open. We didn't see the gap closing. There's still a gap there overnight in the Japanese session. We've had a bullish move so far for this daily bar today. We're up at this level at 110.10, which was a level I was interested in last week, prior to obviously what happened yesterday, but that level could still be significant, and price when this slide was taken was in and around that area. Over on the euro, well, again, this is the reverse of the dollar index as we normally expect. What I think is interesting today, or potentially interesting, is this trend line here. Depending on how you wish to draw that, you could see the move post the French election as a break and effectively a retest intraday of that trend line in the way that I've drawn it there, or even through from that high through to the close at the low there of yesterday's bar. But still indecision, and in this instance we'll be looking for a break above this 9150 area here, or below the 108.250. Those are the areas that really encapsulate yesterday's bar, and we really want to see confirmation on direction, be it to the long side or a break to the short side, before we make any real commitments in there. We will be looking for intraday opportunities, but with a degree of caution today. One thing of interest relative to the euro, this is the DAX, the German stock exchange. It's the weekly chart. We gapped up yesterday after the French election, and we had a close clearly above the all-time high at around 12,400 here. Clearly an opportunity there for price to pull back to that level for trades to the long side, but significant that relief rally, let's call it, where the two parties going through, or the two potential presidents going through on the head-to-head vote, are very much, there's very much a centralist Macron, who appears, according to all the polls, to be have a 30% lead over Le Pen from the National Front movement. Obviously, we're still a couple of weeks away from the second round of the elections, and a lot can happen between now and then, but the market is clearly perceived, or the Eurozone has perceived it as a risk that has diminished. If it continues in the same manner, we could quite easily see over the next 2 weeks, we could see a bullish euro, a bullish DAX, and then when the election comes through and the result that has been assumed happens, we'll see the market sell off. in a classic buy the rumour, sell the news scenario. Over on the pound, well, we're still very much consolidating after Tuesday's shock announcement of the snap election in the UK by Theresa May. However you look at that, I'm looking at it as both a box range and potentially a triangle stroke pennant. I believe, or I'm looking for a break above this 1286 level for a further move to the long side. Any break below this 27, I think I've got it as 2730 zone here. Any break below that, and my opinion will change, and we could potentially see a more significant pullback, potentially down to this trend line here before we see a further move to the long side. So again, we're seeing consolidation there. We talked about the DAX, all the stock markets, the US stock markets were bullish yesterday. We saw, as far as stock markets are concerned, what we would consider a return to a risk-on scenario, but that isn't yet being reflected by gold. Yes, we did sell off, we gapped down, but then we've rejected the level here. We've got a nice low test bar showing us that we haven't got the other side of the risk-on argument yet at this moment in time. So really, unfortunately, I'm saying it again, we need to be cautious. Yes, we will be looking for intraday moves, but I'd like to see some momentum in the markets over and above what we saw yesterday before jumping in on any of those moves. Okay, just to announce the date for the next free live trading event in London, Tuesday the 9th of May in the afternoon. If you're new to Phoenix Blue, you can come along and train alongside the Phoenix Blue fund managers. You can also learn about how we analyse the markets here at Phoenix Blue, not only technically, but we analyse fundamentally, and we use commitment of traders data as well, all to give us a directional bias and improve the probability of our trades. You also have the opportunity to talk to existing Phoenix Blue traders who will be able to talk to you about how these systems and methods turned the corner for their trading and either made them more profitable or made them profitable for the first time. If you are interested in that, just go to the Phoenix Blue website, go through the contact page, send us a message. We're just in the process of updating various other locations like Eventbrite, etc., etc. So as far as today's concerned, if you go to the Phoenix Blue website, at the very least we'll acknowledge that, and as soon as the invites and confirmations are available, we'll send those to you. Okay guys, that's it for today. Thanks for listening, and we'll speak to you again in the morning. Take care.